Before we start this video, do like and subscribe to our channel and not miss on any updates.
We'll start with Accounting Standard 24. Now, as far as this particular standard is concerned, again, it is a disclosure-based standard. This does not tell us largely as to what to compute, how to. They say what to compute, but largely it is based on disclosure. Okay. Now, what is the disclosure about? Disclosure is about something called as discontinuing operation. Now, what is this discontinuing operation? Discontinuing operation, basically what it means is, if an enterprise, for example, has operations in, let us say, multiple different type of products. Okay, so let's say I take the case of ITC. ITC has cigarette business, they have hotel division, they have paper business, they have FMCG. All right, now they have multiple divisions in which they are operating. Now when we say discontinuing operation, if ITC decides, for example, let us say hotel business, they are shutting off, or cigarette business, they are selling it off to somebody. Now cigarette contributes one of the highest profit margins as far as the industry business is concerned. If I am disposing of this particular cigarette division, then I have to inform my shareholders, I have to inform my investors that, see, I am selling off this particular division. This is one of the most important divisions of my business, but I am selling it off, right? So that part, whenever an enterprise decides to discontinue an operation, now discontinue could mean I will sell to somebody else. For example, Citibank sold its banking operations to Axis. Okay, that could be one scenario. Or I may gradually sell off the assets of an operation such that the operation ceases to exist. Or what can I do is I can actually abandon it. Abandon means do nothing, just leave it as it is and exit from that particular place. So multiple outcomes are possible, which is called as discontinuing operation. Now in this standard, the things that you have to understand or remember is, number one, what is a discontinuing operation? You need to learn the definition. Then which is the initial disclosure event? Then what happens subsequently when we present the financial statements, and what do we present in the financial statements as far as the discontinuing operation is concerned. Discontinuing operation is a component of an enterprise. Now this component could be a branch, it could be a division, it could be a subsidiary. It is a component of an enterprise. It is a component of an enterprise that the enterprise pursuant to single plan. So first thing, enterprise has a plan. Enterprise has a plan to do one of these three things. It is a component for which the enterprise has a plan to do one of these three things. What are one of those three things? First, disposing of substantially in its entirety. Means disposing means what? Sale. Disposing of, or selling it off, or transferring it off substantially in its entirety. Means if I talk about, let us say, ITC selling the paper division or cigarette division, 90% of the business is transferred. Substantial in its entirety, I am disposing of. That is the first thing. So when I dispose of, I can sell it, I can transfer it, I can get into a demerger, I can do multiple things. That is the first. So first condition talks about disposing it entirely. Second, disposing of piecemeal. Now what is the meaning of disposing of piecemeal? I want to sell the paper division. I am not selling the business as it is. What I'm doing, I'm selling fixed assets separately to some entity. Inventory, I sold it off to somebody differently. Liabilities, I'm settling separately. So here it is happening on a piecemeal basis. One by one, the parts of the business, I am selling it off. When I say sale in entirety, I am transferring the full paper business. I'm transferring the entire business along with the assets and liability. But when I'm disposing of piecemeal, I'm doing one by one. I'll sell some asset, I'll settle some liability, then I'll sell off inventory, I'll realize money from the debtor, I'll pay off the loan, something like that. Okay. And last one is terminating through abandonment. So the last one is terminating through abandonment. Terminating through abandonment means I have just left it. You would see a lot of factories and all, they don't sell it off. They just leave it as it is. Okay. Why do they leave it as it is? Because by selling the factory, they are not able to realize sufficient money, or there is some legal issue, they are not able to sell it off. So they'll just leave it as it is. That is called terminating through abandonment. So first part, what we have learned is it is a component of the enterprise, and the enterprise has a plan either to sell it off in its entirety, or selling off piecemeal, disposing of piecemeal, or terminating through abandonment. Terminating through abandonment. That is the first thing. Now here, please understand, it has to be a part of a single plan. It has to be a part of a single plan, means it is single plan. It is not that today I have a plan to sell off machinery, tomorrow I have a plan to sell computer, then some other day I go and plan to sell off furniture. That is not a single plan. It has to be a part of a single plan, right? So that is the first thing, first part of the definition. Second is that represents a separate major line of business or geographical area of operations. Now this we have seen in A17 also. It is a major line, separate major line of either business or geographical area of operation. Geographical area could be, for example, for Citibank exiting Indian operations. That is the third one. Second one, then, which can be distinguished operationally and for financial reporting purpose. So first thing is, you should be operationally be able to distinguish it. You can say, okay, this is my paper business, operationally distinguished. And also for financial reporting purpose. Generally, let's say you prepare something like segment revenue and all of that. That has to be considered. So component, single plan, major line of business, and it has to be distinguished operationally and financially. Now please understand, it has to be major line. If I'm selling off small one, I'm closing down one branch out of 100 branches. If I'm closing down 2-3 branches out of 100 branches, that is not a major line of business. Okay, so that is one thing, right? So what you need to understand is, if I am not selling off a major area or major geographical area, major business line, then it does not come into the category of discontinuing operation. Okay, so this definition, please make a note of it and try to learn it. Now here in the first example, they talk about a famous chain of restaurant decides to sell its stake in one of the restaurant. You have many restaurants, you are selling stake in one of the restaurant. Now when I'm selling stake in one of the restaurant, I may not be selling it off in entirety. Second thing is, it is only 5% of total revenue, hence it is not a major line of business. Okay. Group operates in various industries including hotel, airlines, software through its subsidiaries, decided to sell its airline business to be able to concentrate on other verticals. Now here you're selling off in a single plan, component, subsidiary is a component, and one business, airline business. So as a result, it has started to sell its aircraft and paying off the associate liabilities. During the year, it has sold off 5 aircrafts out of the fleet of 50. As a part of the sale, airline business constitutes 25%. We have 50 aircrafts. We have to sell 50 aircrafts, but we have been able to sell only 5 aircrafts. Only 5 aircrafts. But then there is a single plan. It has decided to sell its aircrafts and it has decided to sell its airline business as a part of a single plan, and 25% of the group revenue, major part of the overall business, hence can be considered to be a discontinuing operation. Now, how do we identify separate major line of business or geographical area? If it is a reportable business segment or a geographical segment as defined in A17, normally you can say that it is a major line of business. Okay. Out of the entire business segment, a small part of the segment may also be considered to be a part of your, it also could satisfy the thing of major line of business. For an enterprise that operates in a single business or geographical segment, a major product or service line may also satisfy. So if it has to be, basically what you need to understand is, it has to be a major line of business or area of operation. Now here, if you see this example, they were operating in a single state, sales of 1 lakh, 14 lakhs and 20 lakhs. Now if you see, this is not major, it is only 1 lakh, but 14 lakhs, 20 lakhs, these are major because out of 35 lakhs, 14 lakhs means a good 40%, good 40% of revenue comes from here. Profitability also, if you see 1,50,000, major. So that is where, if you discontinue Y and Z, it can be major, X will not be major. Then this is important again from examination point of view. Examples of activities that do not necessarily satisfy the criteria of the definition but might do so in combination with other circumstances. So this basically means these 4 items may necessarily not be a discontinuing operation. First, Gradual or evolutionary phasing out of a product or a class of service. If I'm gradually discontinuing a product or a service, that may not form part of my discontinuing operation because it is gradual. It is not a part of a single plan. And generally in such situations, what happens is I'm phasing out one product line. I'm replacing that with the other product line. Okay. Discontinuing several products within an ongoing line of business. So I have, let us say, 5 products in, let's say in Indigo. If I have to tell you, let us say I have CA, CMA, ACCA, CFA, these 4 products for 4 services we are offering. We decide to shut down, let us say CMA, but we are continuing with other 3. So that needs not be a part of my discontinuing operation. Shifting of production or marketing activities for a particular line of business from one location to another. So if I have operations in Bangalore, now I want to move my operations to Delhi. Such shifting is also not a discontinuing operation because my operations are continuing. Closing of a facility to achieve productivity improvements or other cost savings. So even this need not be a discontinuing operation. Now, what you need to understand is, if I'm closing of a facility, but if it is a part of a single plan to dispose of a segment, dispose of a component, then it will be discontinuing operation. Then in the previous thing, we said that we have to operationally and financially be able to distinguish the segment. When can we be able to do that? We'll be able to do that when the operating assets and liabilities can be directly attributed to it. So the discontinuing operations that we are talking about, assets and liabilities, we should be able to directly attribute. Revenue, we should be able to directly attribute, and majority of its operating expenses we should be able to attribute. So we should be able to attribute assets, liabilities, revenue, and majority of the expenses. Then we say it is distinguished for operating and financial reporting purpose. Okay, so just one last time, it is a component. In as per a single plan, we are disposing of in its entirety or piecemeal, or we are terminating through abandonment. It represents major line of business, and it can be distinguished operationally and for financial reporting purpose. Now, after we have defined what is a discontinuing operation, the next important thing in this standard is initial disclosure event. Now, initial disclosure event, basically what it means is, and because this standard requires us to disclose the discontinuing operation, when we say initial disclosure event, first time, when should we disclose? First time, when should we disclose? So the standard says, gives us 2 conditions, A or B. In B, we have 1 and 2. Okay, A or B. In B, we have 1 and 2. So first, if they have entered into a binding sale agreement for substantially all of the assets attributable to the discontinuing operation. Binding sale agreement means we cannot withdraw. We cannot withdraw. We are bound by the agreement. So if we have a binding sale agreement, then we should consider it to be a part of discontinuing operation. If I have agreed with someone that I'll sell off this particular asset or sell off this particular component, then that is a discontinuing operation. So here the key term is binding sale agreement for substantially all of the assets and assets attributable to the discontinuing operation. Agreement means the other party has also agreed. We have also agreed. We have decided that we will sell off the thing. The second thing is the enterprise board of directors or the governing body has approved a detailed and a formal plan and made an announcement. So second is board of directors have approved the plan of discontinuance and the announcement also has been made. So generally what happens, the moment board of directors approve, you have to file within some specified period of time with the registrar of companies. The company has approved the plan, the company has come out and made an announcement of the plan. So either of these 2 conditions being satisfied, we call it to be an initial disclosure event. Now, when we say formal plan, what should the plan include? The assets to be disposed, method of disposal, period expected to be required for completion. How long will we take to complete the disposal? Location affected. The location, function, and number of employees will be compensated for terminating their services, and the estimated proceeds or salvage value to be realized by disposal. So basically, the plan has to tell us which are the assets we are disposing, how are we disposing, when we are completing the disposal, which are the locations affected, how many employees will leave, what is the money we will realize, Correct. So this is what is a part of the plan. But most importantly, if there is a binding sale agreement, then it is initial disclosure event. Or if the board of directors has approved a plan and made an announcement of the plan, that is a disclosure event. Whom should we announce it? To lenders, stock exchanges, trade payables, trade unions, etc. So these are the parties who are affected to whom we will be announcing. Okay. Now, this standard is purely a disclosure standard. So recognition and measurement part, there is nothing from this particular standard. This talks about only presentation and disclosure. Now, as far as presentation and disclosures are concerned, I would recommend that you remember at least 5 to 6 points of the initial disclosure event so that if at all a question comes in the examination, you will be able to write it. Okay. Now, what should be disclosed? A description of the discontinuing operation. Which operation are we discontinuing? That has to be disclosed. Then the business or geographical segment in which it is reported as per AS17. So when we are reporting under 24, we have to consider the AS17 requirement as well. So first, description. Describe the nature of the discontinuing operation. Then business or geographical segment in which it is reported. Third, date and nature of the initial disclosure event. When did this initial disclosure event occur and what is the nature? So it could be agreement, it could be announcement by the board of directors. The date or period in which the discontinuance is expected to be completed, if known or determinable. By when are we planning to complete? So what is the discontinuance? Which business and geographical segment? What is the date of initial disclosure event? By which date are we going to complete? Then the carrying amount as of the balance sheet date of the total assets to be disposed of and the total liabilities to be settled. What is the asset and liability breakup of the discontinuing operation? Then the amounts of revenue and expenses in respect of the ordinary activities attributable to the discontinuing operation during the current financial reporting period. This is very important. What this basically says is, what is the revenue and expenses attributable to the discontinuing operation only from ordinary activities during the current financial period? Okay, that's the first thing. Then, so here you talk about revenue and expenses. Here you talk about asset and liabilities. Then the amount of pre-tax profit or loss from ordinary activities attributable to the discontinuing operation during the current financial reporting period and income tax related expense. So here we are talking about profit before tax and the tax component. Profit before tax and the tax component. Then here we are talking about cash flow attributable to the different activities of the discontinuing operation during the current financial reporting period. So what all did we disclose? Description, the business and geographical segment, the date and nature of the initial disclosure event, the date in which the discontinuance, the date by which the discontinuance is expected to be completed, the amount of assets and liabilities in the balance sheet, then the amount of revenue and expenses, pre-tax profit and tax expense, and the next net cash flow. This has to be disclosed, right? Now, as far as the P&L items are concerned, they can be disclosed on the face of the balance sheet as a single line item, and subsequent disclosures can be given in notes. All the disclosures should be presented in the notes to financial statements except for the amount pertaining to pre-tax profit or loss of the discontinuing operation and the income tax expense, which should be shown in the face of the statement of P&L. So in the P&L, you can show, okay, this is the profit or loss from discontinuing operation, and this is the profit, this is the tax expense, and this is the profit after tax. This, when we did schedule 3, there also you can see in the format which is given. Okay, right? Then this is the first initial disclosure event where we said what is the discontinuance, what is the nature, what is the date, by when will be complete, what is the amount of asset and liability, revenue and expenses, pre-tax profit and tax, and cash, net cash flow. Now, when the enterprise disposes of assets or settles liabilities attributable to a discontinuing operation or enters into binding agreement for the sale of such assets or settlement of liability, it should include in its financial statement the following information when the events occur. Now, what is the meaning of this? This basically means that after the initial disclosure event, whenever we are, selling off an asset, settling a liability, entering into an agreement to sell off asset or to settle the liability, as and when the subsequent event occurs, then you have to disclose the following. What are the disclosures? Any gain or loss that is recognized on the disposal of asset or settlement of liabilities attributable to the discontinuing operation. So what is the gain or loss, amount of the pre-tax gain, and income tax expense related to the gain or loss. So if I am selling off, for example, there is a PPE. This PPE is a part of discontinuing operation. PPE is a part of discontinuing operation. We have sold this PPE as at a gain of, let us say, 10,000. This gain has to be disclosed on a pre-tax basis. Then tax expense, let us say 3,000. This has to be disclosed separately. Same way, if there is a loss, whenever an asset is being sold or a liability is being settled, report the gain or loss and the income tax implication. Okay, so now that this is for what? This is for sale or settlement. Then the net selling price or range of prices of those net assets for which the enterprise has entered into one or more binding sale agreement, what is the timing of receipt and the carrying amount of those assets in the balance sheet. So here, if you have sold the asset or settled the liability, then the gain and tax expense. If you have entered into an agreement, here it is just an agreement. When we have entered into an agreement, we'll not recognize gain or loss, correct? So what we have to show, we have to tell them what is the net selling price or range of prices, means how much are we going to get from that, and when will we receive the money, and what is the carrying amount of those assets in the balance sheet. The idea is the user should know that whether there will be a gain or loss when they have completed that particular transaction. All right. So what have we discussed so far? We discussed what is a discontinuing operation, which is a component is as a part of single plan either disposed of in entirety or piecemeal or termination through abandonment, which represents a major line of business or geographical area of operation. That is the part. Then we talked about initial disclosure event, where either the company has entered into a binding sale agreement or the board of directors have approved a detailed formal plan and the announcement has been made. Announcement to whom? The lenders, the bankers, the creditors, the payables, all of those things, right? Then we talked about disclosures at initial disclosure event, description, the timing by which we'll complete, right? Then timing by which when we'll complete, then what are the assets and liabilities, income and expenses, the profit attributable to the discontinuing operation, before tax, after tax, and cash flow, right? Then subsequently, whenever we sell the asset, disclose the gain or loss and income tax expense, or when we enter into a binding sale agreement, disclose the range of selling prices and when we will receive those cash flows. Any questions so far? Next thing is, when should we update the disclosure? See, initially we gave some disclosure. We said we'll realize the money by so much period of time. We will, finish up the discontinuance by this point of time. Then, if subsequently, if there is anything or any event which occurs, you have to describe any significant changes in the amount or timing of cash flows relating to the assets to be disposed or liabilities to be settled and even causing those changes. So for subsequent period, whenever there are significant changes in amount or timing of the cash flows, earlier we thought we'll finish everything by, let us say, 31st March of 25. Now we believe we'll be able to complete only by 31st of March of 26. There is a change, so that has to be updated. The disclosure should continue in the financial statements for the period up to and including the period in which the discontinuance is completed. So till the time you complete, keep on disclosing. Then, once the plan is substantially completed or abandoned, either you have completed sale or you have abandoned the component, then you can stop the disclosures. Okay, but whether you receive a cash or not is not relevant. All right. If an enterprise abandons or withdraws from the plan that was previously reported as a discontinuing operation, the fact, the reasons, and the effect should be disclosed. Any disclosure required by AS 24 should be presented separately for each operation. Now, where should we disclose? The disclosure should be presented in the notes, except you show the pre-tax profit or loss from ordinary activities and the income tax expense. This has to be shown on the face of balance sheet. Amount of pre-tax gain or loss recognized on the disposal should be disclosed on the face, not on the balance sheet, sorry, disclosed on the face of P&L. So on the face of P&L, you have profit or loss from discontinuing operations. So as a separate line item, before tax, and the tax expense has to be disclosed. Now, one more thing what you need to understand here is, if let us say in 2025 we are discontinuing some operation. Okay, we are discontinuing some operation. The previous year you should restate, meaning to say you should identify the profit, the loss, the assets, the liabilities of the previous year, that the comparative period, and you have to disclose it separately. Comparative information for prior periods that is presented in the financial statement after the initial disclosure event should be restated. So you have to restate, segregate the asset, liabilities, revenue, cash flows separately. As far as interim financial reports are concerned, interim financial reports means quarterly reports and all that is happening. You should disclose the required thing as per AS 25. So as and when you sell off an asset, settle a liability, the gain or loss, you should disclose in AS 25. And you should also disclose any significant activities or events since the end of the most recent annual reporting period. So after the balance sheet, if there has been any significant activities that you have to disclose, and any significant changes in the amount and timing of cash flows should also be disclosed. So interim period also you should treat it as if it is a full financial reporting period. And if there is any significant change as compared to the recently annual period which has been reported, or previous year end you can consider, then you should disclose any significant activities or any significant changes in the cash flows that has to be disclosed. AB decided to dispose its clothing division as a part of its long-term strategy. Board approved 1st of March. Formal announcement to effective parties 15th March. Date of binding sale agreement 1st of July. Reporting date 31st of March. The date of initial disclosure event will be, so formal announcement made to the effective party. Date of board. Board approved on 1st. But approval plus this has to be satisfied. So when did we communicate? On 15th of March. When did we enter into sale agreement? 1st of July. So 15th March is earlier. So it will be 15th March. Rohini Limited is in the business of manufacture of passenger cars and commercial vehicles. Passenger car and commercial vehicles. Company is working on a strategic plan to close the production of passenger cars and to produce only commercial vehicles over the coming 5 years. So gradually you want to shut down passenger cars and you want to produce only commercial vehicles. However, no specific plans have been drawn up for the sale of neither the division nor its asset. It's very important. There has to be a single plan. The question itself says there is no single plan. As a part of its prospective plan, it will reduce the production of passenger cars by 20% annually. It also plans to establish another new factory for the manufacture of commercial vehicles and transfer surplus employees in a phased manner. So a gradual phasing out is what we can see in this particular case. You are required to comment if mere gradual phasing out in itself can be considered as a discontinuing operation. Will we consider? No, because we are gradually phasing out. We have not said that. We have not formed a plan to settle it off or to dispose the operation in its entirety. You're saying gradually we'll remove this product, we'll add new product. So that cannot be called to be a discontinued operation. Okay, so answering this question, discontinuing operation, the definition that we have understood, we have already revised it twice, two or three times. This is important. Mere gradual phasing out is not considered as discontinuing operation under AS 24. Okay. So in this, do we need to write all of these things? That depends on the question. Here, we can say gradual or evolutionary phasing out of a product line or class of service in itself is not a discontinuing operation. Same way, shifting of production or marketing activities for a particular line of business is also not a discontinuing operation. Third is not relevant for this particular answer. Third is not relevant in this particular case. Okay. Then, if the company passes a resolution to sell some of the assets in the passenger car division and also to transfer few other assets of the passenger car division to a new factory, does this trigger? So again, here they're not talking about disposal in its entirety or disposal in piecemeal. Okay. The sufficient information is not given. Sufficient information is not given as to whether there is a definite plan that they will complete the disposal or they will transfer it, completely to another entity or something. If I'm moving from one department to another, that is not a part of my discontinuing operation. I'm just shifting the product lines. Okay. Would your answer to be different if the company resolves to sell the assets of the passenger car division in a phased but time-bound manner. So if you have a time-bound sale, and if there is a formal plan, then it can be AS24 covered. The resolution is silent about the stoppage of the car segment in definite time period. Though sale of some assets and some transfer proposal were passed, a resolution to the new fact through a resolution to a new factory, but the closure roadmap and new segment starting a roadmap are missing. So closure is very important. Closure is important. In the third case, there is a phased and time-bound program resolved. So if there is a time-bound program, it may be phased, but it is a time-bound program, single plan. It's a single plan, time-bound, that we will dispose of, and the plan has been approved. And if it has been communicated, that will form part of discontinuing operation. Okay. See, we don't see many questions from this standard in the examination, but I would want you to remember the definitions that we have, so far done, so that you get some clarity. See, initial disclosure event, then discontinuing operation. What is not a discontinuing operation? These 3-4 things, if you remember, you'll be able to handle. And more likely or most likely, you would be getting questions based on your, what do you call, MCQs. That is what I am expecting from this particular standard. So here you can see July 21, 5 marks question. Analyze the disclosure presentation requirement of AS24 for discontinuing operations, any 5. Okay, so we have learned all of this. You have to give any 5. You have to give any 5. This we just now discussed. This was again for 5 marks in the July 21 examination. Again, initial disclosure requirements, again for 5 marks. So here, a consumer goods producer has changed the product line. Now, when you're changing product line also, it need not be a part of your discontinuing operation. Disclosure requirement in interim financial statement given in RTP. Again, disclosure requirement. Examples that do not necessarily satisfy the criteria of paragraph 3 that might do so in combination of other circumstances. These 4 things you have to represent. So it's more about learning. Okay, there is nothing great in analyzing and evaluating. It is more about learning. Okay, right? So now we'll take a 5-minute break and then we'll continue with the next part of our discussion.